Recording in progress.
Okay, so this was a trade sent out in the Forex analysis chat on our mentorship. Now looking back at the chart, it's clear to see that we never got entered into this trade. Even if we had got entered in, it would have probably been out of our trading hours. But as you can see, should we have gotten tagged in, we would have been looking at around 7%, 6.8%. So the analysis was good, but it just didn't play out. So we're gonna leave that analysis and we're gonna start afresh on the daily. So looking at the daily time frame, what we can clearly see is this U shape and this little spike. What this is a teacup and handle in a retail trader's perspective. It's a pattern that suggests a continuation of a trend. So what is expected to happen is essentially another handle there and then another teacup like that. However, I personally think that we're going to start to see up moves very soon, but we need the confirmations for that. So let's see what we can find in terms of general trend. So let's paint a picture here. On the daily, we're bearish. Now let's head down to the 4 hour. On the 4 hour, we're bearish. Now on the 4 hour, I'm potentially looking for imbalances and points of interest. So what I can see is an imbalance over here. That could potentially mean that market is looking to go back up to that area, and we haven't yet broken the low over here, so it could be something that market is looking to do very soon. We do have this pair of inside bar candles over here that could provide fuel for our potential push up. However, this is not yet a point of interest. A point of interest is a single candle where we can find an area where price will move. Currently we're still coming down, but as you can see, the momentum, the downwards momentum is reducing. So let's have a look on our 4 hour, on our 1 hour. So on our 4 hour, you can see imbalance. And now onto our 1 hour. Now looking at our 1 hour, what can we see? Well, we can see there's a swing low over here. We can see there's a swing high over here. Now what we'd be looking to do is take out the low and then retrace up and then continue down, or take out the high, retrace down and then continue up. So this is the sort of area I'm looking at for liquidity. Now we're looking for any major points of liquidity. What I can see here is a liquidity wick area. So in this area, there's a lot of money that the banks are playing with. So now heading over to our 15-minute, so we can see on the 1 hour we found liquidity. Now looking closely, what can we see? On the 15 minute, I'd like to ideally see a break of this liquidity area for us to potentially retest this sort of area as demand to fuel the move up to this swing high. Another thing we could potentially see is a breakdown to this wick where there are equal lows. It's very hard to see. There's equal lows over there. So that means there's liquidity in the market. That could potentially mean the market will come down, break that liquidity, and there will be a point of interest within this wick where market would then change and go up. For us to enter upon that, we do need to see changes in character. So I can see we also have equal highs formed over here. So you've taken out that liquidity to the upside. There's also very weak equal highs over here. Yeah, now we're looking at points of interest on the M15. And now let's drop down to the 5 minute. Now can we see any potential trades on the 5 minute? What I can see is we've had this huge impulsive up move, Wyckoff schematic distribution, then a drop down. We've broken this previous 5 minute demand to grab liquidity. What a lot of traders often do is they mistake a point of interest for a liquidity grab. So although yes, this would be a point of interest, what you need to learn to do is figure out whether liquidity was there, and there was because of this small range, this equal low area, and price looks to take out this sort of liquidity in the market. And this is where a lot of QuickSnipes traders essentially miss out, because everyone thinks that these equal lows means a quick liquidity grab, then a move, but you need to wait for confirmations. And particularly SMC traders, this is where they miss out. So we're always ahead of them. So we've had this down move. What I would like to see ideally is a nice demand zone, which we potentially have, and that would act as our point of interest. And I'd like to see a bit of a range formed and equal lows which have been taken out. What I am looking at right now in the shorter term are these equal highs here. Keep in mind we have these equal highs, and we also have this supply zone, and we are in a bearish trend, so it would make sense to only take sells. Let's drop down to our 3 minute. So on our 5 minute, we found many equal highs, equal lows. Chart. Is that order block right above it? Which order block? Above imbalance on the daily. What was it H4? Let's check the H4. The imbalance is there. We'd like to see market tap into a demand zone potentially, after smaller time frame changes of character, take out this liquidity and move up to our imbalance. Okay, now looking at our 3 minute, what can we see? We can see a bit of a range. Potentially, we could call these equal lows here. And we could be looking for an entry level in here for this range, but considering the fact that these may be equal lows, if they were, we would have had a liquidity grab and then a quick move up, not this sort of ranging market. Maybe because London volume hasn't kicked in yet, but I'd ideally like to see that kick in. So I'm not going to consider those to be equal lows just yet. So I'm not seeing too much in the 3 minute, just a bit of cloudy market structure, you could call it. It's very unclear as to what you could be trading on the 3 minute. Yeah, it's very unclear. What I would say is this is currently the best trade to look at because of the structure, equal highs, supply. It's aligned with the trend. Yeah, I understand it's bank holiday, market volume could be low, but if you think about it, it's euro, US dollar. It's UK bank holiday, I believe. I will double check that right now. Yeah, it's a UK bank holiday. Specifically, that means that the UK big institutions such as the hedge funds and the banks will not be getting in personally. But what I'm looking at is Euro US dollar, so we shouldn't be too impacted by that. The volume is there. So what else can we see on the chart? What I can see on the 15 minute was that failed demand and potential 15 minute point of interest. So the only two trades I'd be looking at is this one to take out this liquidity and then move up to our imbalance. However, I'd only put my take profit here. There's also imbalance here. So I need to be careful with my take profit, and that will be reviewed later on. And the other trade I'd be looking at is on the 3 minute. We'd be looking to take sells from this area. If we drop to the 1 minute, we might be able to see something. Nothing too clear on the 1 minute, to be honest. We could potentially see this as a zone to enter off of. However, I wouldn't count on it because there are equal lows here. And those equal lows acted as liquidity to the upside. When we came back down, it just smashed straight through, so it wouldn't be a reliable area to enter off of. Yeah, so I'd consider on the 3 minute this to be one of my trades, and on the 15 minute this to be one of my trades. However, I will be using the 50% entry level on the 15 minute because anything 15 minute and above, I always like to enter off of half the zone due to the fact that it's such a wide zone, so your risk to reward won't be great if you enter off of the top of the zone, and on a 15 minute, chances of the middle of the zone being hit are very high. So if we look back on 50% of that, you can see it aligns with around these two candles. And if I zoom in on these two candles, just look at the 3 minute maybe. Yeah, you can see here we had a point of interest. It came up. Did it retest? It didn't. And if I was to put a horizontal line in there, or a horizontal ray rather, that's where it got up to. But you can see between the box and that wick there is a little gap. So let's see if the 50% lies within that gap, and it seems like it does. So if I was to put a horizontal line, the 50%, and move back, you see that green line. That is where we're looking to enter. So just to tap into that wick. So what I usually do at this point is that I'll enter off of this horizontal ray, because that is bound to be taken out. Back to 5 minute. So that horizontal ray is at 1.04965, which makes sense, I believe, because it's at 6.4, so I'm entering off of 6.5, so I'm entering ever so slightly higher. It makes sense because it's a rounded psychological number. We have a supply. It would initially be there. However, should I get there, I'd be looking, so I'd risk 1%. Should I get there, I'd be looking to close half the trade and let the rest run all the way to the imbalance. So my next take profit would be here. I'll close a bit more of the trade there and run all the way to the imbalance. And I'd be taking my stop loss value, for example, in this up move, I'd be taking my stop loss value, and every time we create a new point of interest, I'd be putting my stop loss level right below. Then I'd move it when this point of interest is formed. I'd move it when this point of interest is formed, and should we come back and break that point of interest, as a liquidity grab, will be taken out well in profits. So that's my kind of trading plan. So back to the 15 minute, we can kind of see what we're looking at. It's a huge risk to reward, 21 to 1. Chances are high of it being hit, but I do like to play it safe. And realistically, who needs 21% in one day? We live off 20% a month, and it's more than enough. So let me see if there's any other areas in terms of this wick, which I talked about. I'm going to highlight it. Oh, in fact, I'll just use this. There you go. And drop to 3 minute. Yeah, as we can see, so point of interest in here, it's been mitigated. Equal lows are formed. So we could potentially be using this as another point of interest should this point of interest be taken out. So that's our other area. Let's drop to 1 minute, see if we can refine that. I wouldn't do much refining on that. There's nothing too clear there. So keep on the 3 minute. That's a demand zone. So this is the sort of chart I'm looking at for today. Analysis will be sent out on this chat accordingly, and this would be our week high to target. So I'd basically call that my take profit. And yeah, so I hope that rounds everything up for today. Do we have any questions? Okay, no questions. That means I explained everything well. So first thing I'm going to do is I'm going to remove this for a second. I'm going to post this in our, first I'm going to reply to this, and I'm going to say entry level did not get tapped in. And for this trade, I'm just going to post that as analysis. And the call will also be recorded on call recordings, and we'll see how it goes from there. Just going to have a look at the chat. Thanks, was worth waking up for. That's great to hear, honestly. Hopefully you benefit from the trades today. Do we only trade EU? Okay, so we focus our trades on EU. I also look at GU normally, but because it's bank holiday, the pound isn't active, and the pound is the main mover of GBP USD, except obviously for the dollar. But when it's bank holiday, I don't want to be trading a pair where it's based off of the pound at all. I don't want a pound in the quote symbol. So that's purely due to low market liquidity, not enough volume. Trades are unlikely to play out. Also wanted to mention one final thing is, if we look over here and look down, we can see that market goes from here to there currently. But over here, we go from there downwards. So what we're looking at essentially is divergence. Divergence is where the indicator tells you one thing and the chart tells you another thing. What does that indicate? A shift in market momentum. And what essentially helps us is we know there's liquidity there. So chances are liquidity gets grabbed and market wants to then go up. So essentially the indicator aligns with our analysis for this buy and potentially for this buy should we get taken out of this. Any other questions? We're going to have one last look at the DXY US dollar index, and we'll check it on the 30-minute. It looks good, to be honest, because what this looks like to me is a potential Wyckoff schematic, an accumulation schematic. I'll talk more about that in the mentorship. This is where price ranges for a bit and then drops down. So in the long run, we could essentially be looking at this major long-term trend playing out to be that 21-to-1, but that may take a few days or weeks, so we need to be careful. Yeah, I hope that rounds it up. I will be sending out analysis accordingly. If this trade gets taken out, we'll look to take the next one down here. The worst we can be after the end of today is 1% down per trade, so 2% overall, not bad. That would definitely get you through an FTMO. If you're trading 0.5% risk, which you should be on a funded account, even better. Take care.